Welcome back, everyone, to the Risk Intel podcast, powered by SRA Watchtower, where we share risk intelligence with experts from across the banking industry. I'm your host, Ed Vincent, CEO at SRA Watchtower. Hello, and welcome to this special Halloween edition of the Risk Intel podcast. I'm Ed Vincent, your host, here to bring you something a bit spooky and hopefully insightful today as well. Today, we're sharing some scary risk management stories from the field, stories from our team members that highlight some hair-raising, eye-opening moments from their banking and credit union days. So settle in and get ready for tales that reveal the unexpected and sometimes spine-chilling realities of risk. Our first story is from Shawn Ryan, Chief Financial Officer at SRA Watchtower. Now, be warned, this story is a scary one, slightly embellished, but based on a true story, where the CEO of a financial institution claimed he didn't need an enterprise risk management program or platform because he kept all of the institution's risks in his head. Let's hear from Shawn.
Earlier this year, I was at a community bankers conference outside Houston, Texas, promoting Watchtower, our best-in-class enterprise risk management software. During the cocktail hour, I struck up a conversation with a banker who had spoken that afternoon on a panel. When I went to pitch our tool and its benefits, he expressed skepticism. This is his tale. Once, in a quiet corner of a vibrant Midwest city, stood a solid bank whose legacy stretched back centuries. At its helm was Mr. James Thornton, an older, silver-haired man who had run the institution for as long as anyone could remember. Thornton was no ordinary CEO. He claimed he didn't need modern risk management software. He didn't trust it, didn't believe in it. He told everyone that the risks of commercial banking were etched into his mind. He knew every risk, every calculation, every danger, all of it. He kept it all in his head. People whispered about how he was always seemed one step ahead, how every potential disaster seemed to vanish before it could touch his bank. No one could explain it. No crash, no scandal, no fraud could break through Thornton's iron control. Experience, he would say, smiling thinly. I don't need modern tools like Watchtower. I can manage every category of this bank's risk. But there was something about Thornton, something unsettling. Some said he never slept, that the lights in his corner office burned all night. Some swore they'd heard strange whispers echoing from his office after dark. Though the doors were always locked, his eyes, once sharp and bright, grew darker and more hollow with each passing year, as though something was draining the life out of him. One night, a young analyst named David worked late, filing reports in the dim glow of his desk lamp. The office was deserted, except for one soul, Mr. Thornton. As David walked past the CEO's office, he noticed the door was ajar for the first time. Curiosity got the better of him. He approached, peeking inside. What he saw chilled him to the bone. Thornton was sitting at his massive mahogany desk, motionless, staring into nothing. But it wasn't the man's stillness that frightened David. It was the sound. A low, guttural murmur filled the room, voices that didn't seem to belong to anyone. Thornton's mouth barely moved, but his lips twitched in rhythm with the whispering. Papers scattered across the desk bore incomprehensible metrics, and every sheet seemed to pulse with an eerie red, yellow, or green glow. David took a step back, his heart pounding. As he did, Thornton's head jerked up, his eyes locking onto him. But they weren't the eyes of a tired old man anymore. They were black, completely black, like twin voids staring straight through him. Do you know the price of knowing all the risks? Thornton asked in a voice that sounded far too deep, far too otherworldly. David couldn't answer. He could only stare, frozen in terror. Thornton stood up slowly, his form looming impossibly tall. The risks, they whisper to me, he rasped. They never stop. I know them all. I see them all. but every risk demands something in return. The whispers grew louder, swirling around the room like a gust of unseen wind. David felt something cold and heavy press against his chest, as though invisible hands were tightening around his heart. "Leave," Thornton growled, his voice now almost a snarl, "before you too learn the price." David didn't need to be told twice. He fled from the office, the whispers chasing him down the hall. He never returned to work again. The next morning, the office was buzzing with news. James Thornton had resigned overnight. No explanation, no farewell. He simply vanished, his office empty, as though he had never been there at all. But some say, late at night, if you pass by that now dark corner office, you can still hear the whisper of risks and the heavy price managing them yourself demands.
Very spooky. Obviously, that story was a bit embellished, and the names were masked to protect the innocent, or not so innocent, participants. But the scary risk is very real. All risk management practices just living in someone's head is bound to push a person to the brink, while also creating significant exposure for the institution itself. Now, we've started off strong. Next up, we've got two stories from Beth Nilles, Director of Watchtower Implementations. Both stories revolve around Beth's days in loan operations within community banks. Over to you, Beth.
So early in my career, I started at a bank that was fairly new, kind of a startup, and didn't have a lot of controls in place. And when I first started there, I didn't particularly like the setup that they had in their loan system. So I just randomly went in one day and changed it. And suddenly we couldn't process loan payments to any loan. Needless to say, it took us about a week to figure out why we couldn't process any loan payments to any of our loans. Not the best practice to allow anybody into a system to make changes. And that scared me and kind of got me going down the path into risk management. So there you go. Scary. So I worked at a bank that was acquiring other banks. And during the due diligence process, we came across one that was extremely old, had been around for a really long time, and did things like kept cash for UCC release fees in their vault and kept guns, rifles, shotguns, handguns in their vaults, in their branches in rural places. Needless to say, that merger didn't go through. That and many other things were not compatible with the bank that I worked at. But I think that CRO was shaking in his boots while we were doing that due diligence.
Wow, those were some scary stories from Beth. Definitely some key takeaways that are extremely useful for banks and credit unions. Make sure you have some permissions and controls in place, in particular surrounding areas of key risk. And secondly, thorough due diligence is clearly essential during M&A. It's no wonder Beth was drawn to risk management with past experiences like that. Now let's hear from Niki White, our Chief Growth Officer, from a time when she was leading the audit department inside a financial institution. Niki, take it away.
We've talked a lot in our earlier podcast recordings about hidden factories, so this one is actually mine. I'm hesitant to share, but we had a workbook that was something that we used to create our financial statements, and it was beautiful. It had all these interconnected workbooks and formulas and macros in it. And the day before I had to do reporting, it broke. It was on a secured drive. Nobody who was not supposed to get into it was not supposed to get into it, but somebody was trying to help and came in and really broke my workbook. Fortunately, I noticed that my cash flow statement didn't balance anymore and my balance sheet didn't balance anymore, but I had to go back to a previous version from a previous period and rebuild the whole thing because my formulas were all broken.
Hidden factories strike again. Is there anything more scary in the financial services industry? Let's find out next with this story from Megan Turcious, one of our sales directors here at SRA Watchtower. Megan?
I've heard stories of customers working with various functions inside of banks and emailing their personally identifiable information This could be anything from them sharing their full name and address all the way up to their full account number, full credit card number, and even their complete social security number.
Something tells me that one will resonate with all of us. Make sure you're creating a true culture of risk and educating team members on how their actions could affect both themselves and the company. Next story we have is from Trent Terry, another sales director at SRA Watchtower. Trent's going to discuss some scary decisions made at a small community bank where he worked on the loans team. Trent?
So I was working with a smaller community bank under $1 billion, and a local business owner applied for a business loan and was rejected by the underwriters for whatever reason. I don't remember what it was. But the business owner happened to have a relationship outside of the bank with the bank CEO and talked to him about it. And the CEO ended up pushing an exception for the loan through over the objections of the credit team. Obviously, this is a huge issue, violates equal credit opportunity requirements, puts them at significant regulatory risk, risk of a mid six-figure fine per violation. And the thing about unequal credit opportunities is, they're like cockroaches. When there's one, there's usually a lot more. And I feel like this really shows the importance of having an empowered risk team that has the ability to push back the buy-in and is not just being overruled by the bank's leadership whenever it's convenient for them.
Well, Trent is exactly right. Having an empowered risk team would absolutely cut down on a lot of these scary stories. Finally, let's welcome Cathy Jackson, Director of Watchtower Implementations, back to the Risk Intel podcast in order to close out our scary stories for today.
It was a dark and stormy night. Not really. My hidden factory scary story has to do with when we were trying to get lenders to get their loan documentation over to the operations department so that loans could get booked in a timely manner, particularly at the end of the month. And so to kind of remedy that and streamline that, we started allowing them just to send us the signed note, and we would put the loan on the system. And that was back in the days when you had couriers carrying documents back and forth. And so when that didn't work very well, it was, okay, we will fax you the signed note and you will put the loan on the system. And so we're getting these faxes, 5 o'clock, which was normal time for people to go home, 5:30. But we were getting the notes on the system so the loans could build properly and interest would accrue properly. But what started to happen was while we picked up that efficiency, getting the loans on the system, the documentation started to be a problem. The lenders would just get the note signed and figure, I'll get the rest of the documentation later. And anyone who's ever worked in loan operations knows that sometimes later never comes. And so while we picked up the efficiency of getting the loans on the system and getting them billing on time and accruing on time, we started to really have an issue with some super important documentation that was needed to, of course, perfect the lien and complete that loan file. And so while it wasn't a dark and stormy night, it certainly was pretty scary.
Thanks, Cathy. And that wraps up our Halloween edition of the Risk Intel podcast. We hope you enjoyed these cautionary tales from the front lines of risk management. Risk may not always be this spooky, but it's these real experiences that remind us how important it is to be vigilant, prepared, and adaptable. Thanks for tuning in, and remember, while the scariest risks might be behind us, there are always more to uncover. Have a safe and happy Halloween, and we'll see you next time.